Goldman Sachs. For over 150 years, this financial titan has shaped the global economy. From humble beginnings in New York City to its current status as a global investment banking behemoth, Goldman Sachs's journey is a tale of ambition, risk, and resilience. It's a story about gutsy decisions, calculated gambles, and the cutthroat world of high finance. We'll explore its evolution from a small-time commercial paper trader to a global financial powerhouse. Along the way, we'll meet influential figures like Marcus Goldman, Samuel Sachs, and Lloyd Blankfein. Get ready for a wild ride through the world of Wall Street. This is the story of Goldman Sachs. The year was 1869. The American Civil War had just ended, and New York City was buzzing with the energy of a nation rebuilding itself. In this dynamic environment, a German immigrant named Marcus Goldman arrived with little more than a dream and a knack for finance. Goldman set up shop in a cramped office on Pine Street in Lower Manhattan. His business? Trading commercial paper. These were essentially short-term IOUs issued by companies to raise quick cash. Goldman excelled in this world. He had a keen eye for opportunity and a reputation for honesty and integrity. He built close relationships with his clients, many of whom were fellow immigrants trying to make their mark in the burgeoning American economy. Word of Goldman's trustworthiness spread quickly, attracting a loyal clientele. But the story of Goldman Sachs is about to get a whole lot bigger. In 1882, Marcus Goldman made a decision that would change his firm's history. He brought his son-in-law Samuel Sachs into the business. Sachs brought new energy and vision. The firm, now M. Goldman & Sachs, expanded beyond commercial paper. In 1896, Goldman Sachs joined the New York Stock Exchange. This move allowed it to underwrite securities for major corporations. The early 20th century saw tremendous growth for Goldman Sachs. The firm financed American industry, underwriting for companies like Sears. Goldman Sachs was becoming a force on Wall Street, but the Great Depression would test the firm's resilience. The stock market crash of 1929 sent shockwaves through the global economy. Goldman Sachs, like many other financial institutions, was not immune to the devastating effects of the Great Depression. The firm faced significant losses as the value of its investments plummeted. The once booming market for underwriting new securities dried up, forcing Goldman Sachs to adapt or perish. The firm tightened its belt, streamlined its operations, and focused on its core strengths, providing sound financial advice and managing risk. As the economy slowly began to recover, Goldman Sachs emerged from the Depression leaner and more resilient. The firm played a role in financing the war effort during World War II, further solidifying its reputation as a trusted partner to American businesses. In the post-war era, Goldman Sachs continued to expand, focusing on mergers and acquisitions. The firm's ability to navigate the turbulent waters of the Great Depression and emerge as a leader in the post-war boom is a testament to its adaptability and its commitment to its core values. Section 5, Going Global, the Blankfein Era. The 1980s ushered in an era of deregulation and globalization in the financial markets. Goldman Sachs, under the leadership of CEO John Weinberg and later Robert Rubin, seized the opportunity to expand its reach far beyond Wall Street. The firm opened offices in major financial centers around the world, including London, Tokyo, and Hong Kong. In 1999, Goldman Sachs went public, raising nearly $4 billion. The leadership of Lloyd Blankfein, who became CEO in 2006, marked a new chapter in Goldman Sachs' history. Blankfein pushed the firm to take on greater leverage and make bolder bets in the financial markets. Under Blankfein, Goldman Sachs became a pioneer in the use of complex financial instruments, such as derivatives and credit default swaps. Section 6, the 2008 Crisis, a fall from grace. The 2008 financial crisis was a watershed moment for Goldman Sachs and the global economy. Rooted in the collapse of the subprime mortgage market, it exposed the fragility of the financial system. Goldman Sachs, once a pillar of Wall Street, found itself at the center of the storm. The firm's involvement in mortgage-backed securities came under intense scrutiny. Critics accused Goldman Sachs of profiting from the housing bubble. Goldman Sachs emerged from the crisis battered but not broken. Section 7. Facing the music, responding to criticism. The aftermath of the 2008 financial crisis was a time of reckoning for Goldman Sachs. The firm faced a barrage of criticism from the public, politicians, and regulators. It was accused of everything from unethical business practices to outright fraud. Goldman Sachs responded to the crisis on multiple fronts. It paid billions of dollars in fines and settlements related to its mortgage-related activities. It also made changes to its business practices, reducing its reliance on risky investments and increasing its capital reserves. The firm launched a public relations campaign to repair its tarnished image. It emphasized its commitment to ethical conduct, its contributions to the global economy, and its efforts to help clients navigate the financial crisis. However, public skepticism remained. The challenge for Goldman Sachs was to regain the trust of its clients, its investors, and the public at large. Section 8, The Road Ahead, Tech Innovation and Consumer Focus. In the years since the financial crisis, Goldman Sachs has sought to reinvent itself once again. The firm has embraced technological innovation, investing heavily in areas like artificial intelligence, big data, and cloud computing. Goldman Sachs has also made a concerted effort to diversify its business, expanding into new areas like consumer banking and wealth management. The launch of its online banking platform, Marcus, in 2016, signaled the firm's ambition to become a major player in the retail banking market. The firm's foray into consumer banking is a significant departure from its traditional focus on institutional clients. Goldman Sachs is also facing increasing competition from Silicon Valley giants like Apple and Google. The future of Goldman Sachs is inextricably linked to its ability to navigate these technological disruptions and to anticipate the changing needs of its clients. Section 9, A Legacy of Financial Innovation and Controversy. From its humble beginnings on Pine Street to its current status as a global financial titan, Goldman Sachs has left an undeniable mark on the world of finance. The firm's story is one of ambition, risk, resilience, and reinvention. Goldman Sachs has been a pioneer in many areas of finance, from underwriting securities to mergers and acquisitions to trading complex financial instruments. It has played a pivotal role in financing the growth of American industry and in shaping the global economy. However, Goldman Sachs's legacy is also intertwined with controversy. Despite the criticisms, Goldman Sachs remains a formidable force in the financial world. As Goldman Sachs looks to the future, it faces the challenge of balancing its pursuit of profit with its responsibility to society. Thank you for watching, and don't forget to like, subscribe, and hit the notification bell for more stories about the world's most influential companies.